So with any skill, there's a cycle that you got to go through in order to get better at the skill. It starts with executing or practicing, then it goes into like reviewing the feedback that you get from practice. For example, like going over film and stuff like that. Anything that just gives you feedback, reviewing on the feedback that it gave you. And then lastly is iterate, right? Making changes based off of that feedback. Those are the three cycles that literally, if you apply to any discipline, skill, or anything like that that you want to get better at, you will get better at, so long as it's applied over time. For the longest, I have been neglecting the review feedback part of my trading approach, probably for the last 6 months. And over the last week, all I've been doing has been grabbing a journal and just kind of reviewing my sessions afterwards, or writing down notes of observations that I'm making while I'm trading. And it has literally opened me up to a few things to help me better understand my strategy. So in today's video, I'm going to go over some of the things that I kind of found in my trading by reviewing film and also trading live. Let's go ahead and break into it. So the first one, I don't need my computer for, but it's just how stressful it was for me to capture the last 10 points that I needed in order to pass my prop firm challenge. Throughout the whole challenge, probably easy breeze, but today was the first day where I traded and I felt mentally exhausted afterwards. And I think it's because we place so much emphasis on the perceived risk, right? Like, okay, cool, we're right there to passing our challenge, so now there's a lot more perceived pressure than it actually is. Because, like, who's to say I can't just trade tomorrow? And I really felt that today when I was like 10 points away from passing. But as you'll see in a video that probably will come out sometime later this month, I talk about how I use mental toughness. And today was a day where I really had to hone in on the tolerance and resilience portion of mental toughness. I have a video that's going to be coming out later this month that'll be talking about the formula to build mental toughness as a trader. And those two variables that I just mentioned are key parts of building mental toughness. And today I had to heavily rely, and I would want to say I got a lot better with building it. Now the next thing that I'm going to talk about, I'm going to need to physically show you on film. So let me go grab my computer. I'll be right back. The first one I would like to go over is, I noticed when Delta is struggling to break its max high that it's set within the candle, it might be a sign that momentum may die out. Now, this is something that is just going to be an observation that I'll pay attention to a little bit later. This is not a change that I'm going to make into my strategy at all. It is just something to be aware of, that if I notice it actually means something, it can affect my edge and, maybe increase it a little bit more. So let me check on this better percentage. Okay, we're at 9. So this was at 22.13. So right here, 22.13, right? I want to look at this candle right here. So notice how our max high was at 182. And as we kind of accelerate, we have a really hard time at these highs breaking the max delta at 182. I think it's a little bit before. No, it's right here actually. So as I took this entry, we set a max delta of 182. And while I was in this trade, as you can see, we were struggling to kind of break above it. And once you see it just kind of die down, it's almost like, imagine you're at a resistance, candle pushes up into it, and then it just kind of pulls back as it's like, starting to reject that level. That's what I kind of envision it to look like. So this is something that I'm going to look out for a lot more when I'm taking my trades and stuff like that. But this was observation number 1 on the day. Observation number 2 comes at a potential play that I will be looking a lot. I think I've taken this play a lot of times. I just was unaware of it, and I call it the 2 candle spike. So let's go to level 40 minutes into the film. All right. So first candle is a very strong candle with strong delta, strong volume, that attacks lows or minor lows but does not break past it, but it is mighty close to breaking to it, which means, like, for example, the sellers, before that 1 minute candle closed, they closed that candle right by, and I'm using they like they're controlling the markets anyway, the candle closes right by the lows, which gives it a higher chance, if we're not ranging, to confirm the downwards move or the strength of the downwards move in the second candle. I'm making a bet that at this certain area, the second candle has a higher chance of confirming that downwards move based off of the strength of the previous candle and breaking lows. So for example, you see in this candle, right, once this candle closes, it closes right by these lows right here. The second candle starts to form strong delta. So now we're on MNQ, strong delta, starts at 100. So now we start to see that little spike, and we want to wait for that confirmed move. Looking at how the candle is playing out, looking at how the delta is playing out, if you see that another delta spike, which we should see shortly, right here, right, that is basically giving me reasoning to believe that, hey, it might confirm the strength in the first move and continue to move lower. So still at 10%, we're good. And then as this trade plays out, we see we get a nice 20 points from it. And lastly, at 54.43. Now this is one that I think can go for a lot of, pretty much this rule or this observation can go for everyone, no matter how your trading style is. I take that back. Maybe not everybody. Swing traders, this probably doesn't matter as much. But what I've noticed is that latency in your trading platform will lead to bad entries. And if you're a scalper, you know that probably one of the most important thing is your entry. So if you're getting a bad entry, right, if you get a bad entry on a trade, it's better off, and this is an iteration that I'm making. So what that means is I believe that this contributes to my performance so heavily that I'm willing to make this change moving forward. Bad entries cause to latency. For example, I was supposed to be entered in over here, right where my arrow is, but instead I'm entered in up here. Bad entries that's caused by latency should be closed immediately, because then what you're hoping on, especially as a scalper, the only reason you have left in the trade is to hope that your reasoning for the trade is strong enough. I don't like to trade off hope. So in this case, I should have closed it right as soon as we noticed the bad entry. As soon as the entry's out, I was like, no, I don't like this entry. And you'll hear me say it right here. What a horrible fucking entry. Right there, I should have closed. Even if it's a minor loss, right? The only reasoning I have to still be in this trade is hope. And I got supremely lucky. Extremely lucky. Because it literally came 1 point away from where I would have had to close this trade and somehow managed to make it back to break even. And even go even further. So I got extremely lucky in this case, but not every time. In majority, if we're looking at it 10 times, 7 out of these 10 times, it's going to go against you and it's going to be horrible and you're going to be tilted. And we want to completely avoid tilt-inducing scenarios. Lastly, as the church bell goes off, is range trades. So when we have the expectation, and I didn't write down where this was, but I'm pretty sure this was our last trade. When we have the expectation that it is a range like condition market, we should play the range. But here's a new bottleneck. I am not comfortable in taking trades that go against current momentum. So like if a bearish candle is attacking a level, I necessarily won't take an entry until I see a bullish candle. I want to go with momentum. I am done with trying to counter moves. That's a thing in the past. So here is a really good example. I think we're going to range between this low and this high. So I wait until we break this low. If this is the first bounce off of an imaginary resistance line, then I'm going to wait until we break the second and take an entry. And hopefully, right, if I'm right here, or not if I'm right, but if conditions stay the same, we shouldn't break the highs, which is over here. which is a really good area to place your stop. We shouldn't break the highs. We should continue towards the bottom of the range. If we break the highs, then that means market conditions may have changed for that moment, and that is a valid loss to take. So we have passed this funded challenge, which is really good. In total, we came back from an 1100 drawdown. But these market conditions over the last 2 weeks have been really favorable because it's uncertainty because of the Fed rates, I'm assuming. And when there's uncertainty in the markets, there's higher volatility. And when there's higher volatility, I trade a whole lot better. So today we took 6 trades and netted a net profit of $757 to pass the funded eval for week 3. And now we have a funded account. We are going to push into getting a payout. One thing I do got to remember moving forward is that now that we are in the funded stage, pressure or perceived pressure is going to be a lot higher. I'm going to perceive that there's a lot more at stake, even though the only thing that really is at stake is $96. But, opportunity, perceived opportunity and all that can make it seem like it's a lot more. That's it for today's video. Hope you guys enjoy. Hope you guys learned something. And yeah, feel free to subscribe, follow along for the journey, and also follow along for some tips. I don't know, I'm just rambling at this point, so let me stop the video here.